Everyone, this is the type of momentum that you have to start nibbling long. I'm sorry, but in today's video, I'm going to explain why. We're going to talk about the large tech stocks, the SP500, the NASDAQ. We gap down. How am I saying to start leaning long? Yes. In today's video, I'm going to explain why. All right, so I hope you guys enjoy. Please make sure to like, comment, subscribe, do all that good stuff. Let's get started with the video. First and foremost, this is a rising wedge on the daily time frame of the S&P 500 futures. As you can see, rising wedges are bearish patterns. We ended up double tapping this level here, and then we are falling now. Spectacular. Why is this now the time to start dibble-dabbling, nibbing? Now, I forgot the term. But why is this now the time to start entering slightly long? It's because the large tech stocks are very overextended to the downside. Let me show you. So, number one, we were looking at Apple on Friday. Apple, I was explaining how it did not have as much more room to go to the downside. And what we wanted to see, so just as a recap, what we wanted to see on Apple is multiple opens and closes outside of this Bollinger Band. So this Bollinger Band is the blue line here. What we wanted to see, multiple overextensions below that level. So what the Bollinger Band shows is a standard deviation outside of the upper or the lower level. Generally, when a stock is trading outside of the lower level here, it shows that we are algorithmically overextended to the downside. Therefore, there should be a bounce to return to the mean or the average price, meaning it should re-enter the Bollinger Band price. So what I like to see before entering long on a large stock is I want to see multiple instances where we are opening and closing outside of the lower level of the Bollinger Band. This weakness cannot sustain itself. There's only been a few instances over the past few years where this weakness did sustain itself. One of those times was the COVID crash. And I don't think that what we're seeing right now in terms of a pullback is similar to the COVID crash. So, unfortunately, I'm not entirely convinced that this is a bottom, right? Let me go ahead and show you guys. So, we can still just move my... Okay. So, we can still come back down a bit lower. All right, this is not an automatic market's going to reverse here. But you have to, because you can only do two things. You could either be a bull or a bear or sit in cash. Does this make sense to start shorting? Does this make sense to start becoming very, very bearish now that we are a multi-trillion-dollar company, algorithmically overextended to the downside, trading very, very weak, and it is down over 11% from the highs? Is this now the time to start shorting? No, it's not. Is this the time to start leaning a bit long? In my opinion, yes, it is. Is it the time to start aggressively going long? No. But this is essentially a big reason why the overall market really started to bounce, because we caught Apple at the lows here. So Apple clearly is doing very well. AMD is also another name. It is a tech stock trading outside of the lower level of the standard deviation Bollinger Band. You could see here, AMD got a close on Friday, and then we opened outside of the lower level of the Bollinger Bands today. So this, coupled with Apple, coupled with NVDA, also showing a lot of extreme weakness, and we bounced very aggressively in NVIDIA. We bounced very aggressively in Tesla as well. These are not completely bearish setups. Okay, these are clearly, you can clearly see, these are not really bearish setups, right? So when there are instances of buying opportunities, you have to take them for a longer term. So we got into, instead of going into details, the contracts are already up. But we dabbled, we nibbled on some longs on Apple. And that's really like, it becomes that simple sometimes, because preparation allows us to see these certain stocks and certain patterns and just patience. We ended up just having a very, very simple day. I told everyone in the Discord to just lean bullish the entire day. I didn't take any short. I'm not sure if I did, but we just leaned long. We went long in the morning. We went long on Apple. Nice and simple day, and we ended up having a very comfortable day, just having a nice, simple bias. The market was clearly showing a lot of bullish price action. We held, so not only this is the chart of the S&P, right? We came back and filled this gap down here at 573. Sorry, at 576, 70, right? We filled the gap. Nice and simple. And we reversed back up. So this is really, I was showing how the gap to the downside was a target that we could have seen for a bearish move. We got that already. Do I still think we can come back into the 570s? Yeah. Personally, right? Here's the problem. I personally do think that the market, just based off of this amount of weakness, right? I would be kind of shocked. I would personally be kind of shocked to see the market just make a V-shaped recovery and we don't make any lows. And just purely based off of the momentum that we're seeing, I wouldn't be shocked to see another retest in between this 568 to 575 level. That's just me. I'm going to be even more aggressively long down here as well. But, we had to take the longs where they set up. But to be, just tunnel vision, very convinced that the bears or the bulls are going to lift this market up, not so much. Not so much. But, it is what it is. The S&P also opened outside of the lower level of the Bollinger Band, which also fueled a move to the upside. This doesn't necessarily mean that the move is going to continue into new levels of resistance. It was just good for at least one day. So we got that one day. Generally, we see a second day going upwards to the upside as well after we have a open and a big green candle outside of the lower level of the Bollinger Bands. So we had one on Apple, AMD, and SPY, right? The NASDAQ, etc. When you get an open outside of the lower level of the Bollinger Band like this, the second day also tends to be bullish. Now, if we end up getting a monstrous open to the upside, if we end up getting a close back above 587 tomorrow, then sure, this is very, very bullish. This is very, very bullish because what this is a break above the 50% fib, essentially. So the 50% fib is at 587.30, right? So if we get a close above 587 after one day, right, this is going to be a really, really like a fantastic move to the upside on the SPY. And I'm sorry, this chart is very, very dirty, but we could get a better understanding on the NASDAQ as well. So the NASDAQ also opened outside the lower level. Big bounce. Had to lean bullish. When the market is very overextended, according to the Bollinger Band, you can't lean bearish. It's just all of the moves today, they were stunted to the downside. A lot of them just ended up ripping up. And towards the end of the day, we were just chopping, but slowly just inching up, up, up. That's exactly what ended up happening. In the morning, I was saying to lean bullish, and this is why. When the large tech stocks, when trillion-dollar companies are opening outside of the lower bands, you have to be bullish for a longer term out. And especially, if day trading setups do arise, good to lean long during the day as well. That's what ended up happening. The NASDAQ could end up breaking above 512, 514 tomorrow. If it ends up doing that, once again, I don't think that we will end up seeing lows here, but just purely based off of what I'm seeing, this is not your average bottoming out process, which is my point, okay? The S&P, the NASDAQ, in my opinion, there should be a bit more room to go. I wouldn't be surprised to see the NASDAQ down at 490, 495-ish area. I don't think that's off the table still. So That's the problem. With being too aggressively long, there's still more room to the downside, and that's really my thought process. We could take a look at the rest of the large tech stocks. Microsoft doesn't look that great. This is not your average bottoming out process. Microsoft still looks like it has more room to go. A break of 410 is still very, very easy. It's still on the table for Microsoft here. Let's take a look at Amazon. Amazon, it's trying to hold its own, but once again, there's still a lot more room to go to the downside. The momentum is still bearish. It would take, for the market to continue bouncing, it would take a miracle from bulls to just swoop it up. Because right now, they are trying to paint a very, very bearish picture that there is more room to go across the board. So Amazon, more room to go. Google, not as much. Google looks much more bullish than the other stocks that we've seen so far. Google is holding its own. Looks pretty decent. Meta doesn't look as bad as the other stocks as well. So Meta also looks decent. It doesn't look like it has that much room to the upside, downside. Netflix looks like it has room to go to this trend line that we've been looking at. I didn't expect us to come and touch it, but we have room to go to around 810. So there's still a bit more room to go to the downside on Netflix. This is not just looking at this, right? I don't feel very comfortable to try to long this aggressively. I would rather it, come back to this trend line, come back to more stable levels of support, because clearly this level of support is not really holding. If we can come back down to this 810 level, it would coincide very well with the highs and the lows here, and then also with this trend line. That would be a much safer opportunity. So, like I said, Netflix has more room to go to the downside as well. And Tesla clearly looks bullish, right? So these are not just your automatic reasons to be bearish. But there are, so I'm light bullish, leaning neutral to bullish, right? But I would expect some more room to the downside, to be honest. And it's just purely based off of the bearish momentum that we see. Unless you get the stocks like Tesla, NVIDIA, and Apple to start really, really just pushing the market to the upside, I don't see how. Basically, we need to see the leaders lead, okay? And if the leaders don't lead, they're not going to be led. The market's going to lead itself to the downside. So that's essentially what I'm looking at. So far, it becomes very easy to monitor using Bollinger Bands. Definitely do that. Definitely put that on your chart. And it really, really helps, okay? So there's that, to be honest. I hope you guys enjoyed today's video. Aside from this, actually, we did see a VIX crush. We saw a volatility crush earlier in the day. And the VIX was up. It was skyrocketing up. It was up almost 20% at one point. So this is the cash VIX was up almost 20%. This is up 12%. But then we ended up closing red. Watching the VIX is very, very important because it almost does the exact opposite of what the market should be doing, okay? So if the VIX is falling like this, the market should be green. And that's exactly what ended up happening. We were red, so we were green on the VIX at first, right? Continued rising. And then the market bounced. And as the market bounced, the VIX dropped. So now, is this a bearish setup on the VIX? It's tough to say because this is a bear flag. We did come to this level of resistance and we failed it. So now if the second day can also be a continuation, if we can close below 1850, $18 on the VIX, similar concept to a second day of bullishness on the SPY, QQQ, Apple, and AMD. If we could get a second day of bearishness on the VIX, that's something that we have to monitor. And so far, so good. I would much rather be bearish on the VIX than bullish currently. And, just in general, I'm not entirely, once again, I'm just going to reiterate it, end the video off like this. I'm not entirely convinced that the market is just going to bounce from here. If it does, spectacular. That's great. I don't think that it will occur like that, but I could be wrong. Either way, we're going to make money. But with that being said, guys, just be careful. Be way more patient than you normally are. I know this is the new year. I know that this is January 2025. We've been learning how to trade for so long. We want this year to be fantastic. This sort of market environment, if you trade it improperly, it will ruin the rest of your year. These are decent opportunities to start slowly getting into longs, but these are not the opportunities to start aggressively ripping it. So just please be careful. Just be patient. And aside from that, I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.